Hey, welcome to the Starsteaders. We're going to be doing our first episode, and it's going to be financial. Um, Hold on, I'm looking for my notes. There we go. Okay, again, Starsteader series, episode 1. We're going to be doing a financial focus today with our member who is incredible, Jinean Florom. She is the business operations manager with Wealth Legacy Partners. Jinean is a justice seeker, teacher, and advocate with a diverse skill set, grounded in deep spiritual wisdom and grace. So we're really lucky to have her. Just as a brief intro, these are some of the skills that she brings to the table. She does education and development skill sets training for people over 50, which is a lot of us in this group. She's a case manager. Um, let's see, research analyst, real estate investment consultant, small business advisor, independent acquisition specialist, independent research analyst. The list goes on, right? So at the end of the show, we'll have a big write-up about Jinean, her LinkedIn, her website, ways that you can get on her calendar for free consultations if anything she talks about today seems like something you need more advice on. So without further ado, I'm going to say hi to Jinean and let her tell you a little bit about herself, and then we'll get into our topic today, which is about new regulations that are going on with LLCs and the shenanigans that our government's up to. Welcome, Jinean.
Hi, thank you for that lovely introduction.
A little bit
I'm
scattered, but it's my
humbled.
first time. So, well, you're very skilled and very amazing, and I appreciate your heartfelt willingness to share the skills and knowledge that you have. We need
Thank
it.
thank you. Yeah, it's needed. It's needed everywhere, and it's scary sometimes getting out there to get all this information because there's so much going on in our world right now, and
Definitely very complex.
yeah. So, I guess the first thing I'd like to talk about is one of the biggest questions, and one of the reasons why I'm here is to talk about what, if you're a small business owner, what do you do today? How do you navigate all this crazy water that we're rowing through? And sometimes we need a power engine to get through it
Mhm.
because we stall. We don't sometimes even know what's going on. And I was a business owner. I'm not a business owner now because of this new law that just went into effect called the Corporate Transparency Act. And those of us that are in the know, we didn't know it until literally September of last year, and the impact that it was going to have on businesses. And the way that this whole entire law was developed was, um, and how it was announced was sort of like blindsided everybody that in business
Overt.
that understood it.
Hmm.
Yeah, it was just like
Hmm.
boom. And basically what is the Corporate Transparency Act, effective January 1st of this year, says that you have to attach your social security number to your LLC, where before last year you didn't have to do that.
Right.
And why is that important? Well, we'll get into that in a minute. But when you have your when it was a law that was enacted under the Patriot Act, under the Money Laundering Act,
Hmm.
to enforce you to do that. And probably most of us have already done it. I know, for example, sometime in October, I was logging into my bank account and it asked me if that was my social security number. And I subconsciously just went, yeah. And at that very moment is when I attached my social security number to my LLC online.
Okay.
And when I realized what I had done, I had already now, by the end of the year before I closed my companies down, I had attached my social security number to my business. And now I have a FinCEN number that's attached to my business.
And what is a
And
FinCEN number?
so the FinCEN is similar to like a social security number. It's an
Okay.
identification number that identifies your bank account with your social security number to
Hmm.
see how you're managing your money and your transactions that goes through your business account. And
Where
so
previously, when those things were separate and you just had your EIN number, it was your business is over here, your personal is over here. That protected
exactly.
you from liability. That's no longer
Yeah,
an
no.
option. Okay.
No, that's not an option anymore.
Okay.
Mm,
Yeah, we'll have
no.
to dig into that more too. So,
Yeah, yeah. So remember that question because that's a very good question. It's a very important question moving forward in how we navigate the business waters these days.
mhm,
I think the worst part about it is that it is targeted for anyone who has a business that makes $5 million or less
mhm.
and has 20 or less employees.
So
Now put
the
that in
big wigs
perspective.
don't have any problems. It's the continued attack on small businesses. Yeah.
Yeah, in communities that are the salt,
Mhm,
the pillars of our communities.
mhm,
They're coming at the ground floor level, the platform level, the ground floor of a community and attacking small businesses on that level that have influence in their communities.
wow.
And it's a money grab. It really is honestly a money grab. But the problem is that they're saying that, well, even though it's a money grab, they're saying that if there's one transaction that doesn't go along with the grain of what your spending habits are normally in your LLC, S Corp, C Corp, LLP, LLLP, PC. Okay, I'm naming off the different types of entities.
Mhm,
So if it doesn't go in the grain of what your normal spending habits are, okay, then you get a suspicious activity report done when you are at your bank that has to be given to the bank manager who by law has to provide the suspicious activity report to FinCEN. And then you get another number that says you have that this suspicious activity report has a number on it. So then they really start monitoring, but they're monitoring you anyway now that you've attached it. So let's, let's say let's just do a story. So let's say you work in real estate or you have some rental properties or
mhm,
even your own, it depends. So you go to Home Depot and you're buying a bunch of supplies and you haven't had breakfast or lunch and you were in Home Depot, there was a long line there, you're starving half to death. So you take your business card and you go buy a hot dog at the hot dog stand. Some of those Home Depots have those things.
mhm,
And you buy yourself a hot dog. And this is a story, this is hypothetical, but it has happened. And then so you buy a hot dog and then you go in and the next day or Monday or Tuesday, you go into the bank and you make your deposit, but you've got your 22-year-old, and yes, I'm putting numbers on age right now. You have your 22-year-old bank teller who has been trained over the last year on how to identify suspicious activity in a bank account, who's 22 years old. She's never or he's never had a business,
mhm,
but they are aspiring to be a bank manager. So they want to please the bank manager because the banks are part of the spies, literally, that are looking at our accounts and they get, let's say, a successful, suspicious activity report on a business. And then should FinCEN come in and freeze your accounts they won't tell you when it happens. Then what happens is with a successful suspicious activity report where they can allegedly say that you've been money laundering, whatever that means, because in this particular small entity compliance guide, everything is very, very vague about what the reporting requirements are. So then you bought a hot dog at Home Depot. This 22-year-old teller who has absolutely no business experience writes up a SAR. You get a FinCEN, you get a suspicious activity report number through FinCEN, and now you're a criminal. So now they're going to watch you. Now let's take this a step further. And again, this is a very mild example, but I've got more, but I'm giving you an idea of how something can go down at a bank.
mhm,
So then you get a suspicious activity report. You go in and you make a $10,000, $5,000 deposit on, your income that you earned that week or that month. Okay. However you make your deposits. Well, you've got this report and they're going, how is this possible that this person could be making this size of a deposit? Well, that also is being looked at now because, you know, you've got a suspicious activity report on you. So now the AI, which is implanted in the system, is looking at all of your transactions and monitoring every piece of money, every penny, everything that goes in and out of your account now, because you've got this suspicious activity report going on. Then what happens is the next thing you go on, you're driving to work, or you're driving, or you've got a fleet of cars, or whatever you do in business, you're doing something, and you take your debit card and you go to pay for something, and then it says it's declined. This happens every day, and I'm going to give you some examples in a minute.
Okay.
So you go and you don't wait a minute. I just made a, $5,500 or a $10,000 deposit. What do you mean I don't have any money? You call the bank while you're standing at the pump, let's say, putting gas in your fleet of vehicles, because you've got a job site. Let's say you're a contractor and you've got a job site you got to get your guys to, or whatever, and you have no money. What do you mean my account's been frozen? What do you mean? And the banks do not, by law, under this law, do not have to tell you what they've done and where and whether they're going to release your money or not, and the fact you don't have it. So now you are standing at, you have no gas in your car, you can't pay for it, you have no access to any of your accounts. Let's say you have more than one at the bank, which most business owners do.
Right.
Guess what? All of your assets in your business have just been, because of the SAR, have been confiscated by FinCEN through the bank, through that reporting.
Whether you've
So
done
then you
anything wrong
call
or
your
not.
lawyer. Yeah, you call your lawyer if you have one, and you say, "Hey, I've got to talk to you." Any lawyer that's in the know on this is going to say, "There's nothing I can do," because under the Money Laundering Act, which is where the law has been formed under the Patriot Act because of 9/11, okay? Under the Money Laundering Act, you, by law, cannot have a lawyer represent you when you've been SAR'd. Now let's take it one step further. Let's really go down the rabbit hole. So you've been SAR'd. You have no way to pay your mortgage, buy gas for your car. Now what's happened is your business is tanking. Federally, I don't even know what the laws are, but I think there's something that's coming about whether you have to file bankruptcy or go through a lawyer, because you can't have a lawyer when you've been SAR'd, because they're saying that you're money laundering. So there's a question there.
Mhm.
And then the next thing, your wife or your husband leaves you. Okay, your family's falling apart. Your car just got repossessed. Yes, it can get that bad within a matter of 3 months, literally. And
Mhm.
then if you don't pay your mortgage, okay, what's going to happen in 6 months? Your house is going to get foreclosed on. All of these things can happen within the course of one person who's behind at the bank, who thinks that buying that hot dog, and yeah, that's a light way of putting it, but buying that hot dog when you went to Home Depot, that one episode could be considered money laundering. Now, there are people out there, I know, just from working with the lawyers and the law firms that I do with my case file manager and clients, and working with, agencies to get these people convicted, which I do. One of the things that I have seen is people going for the PPP and committing fraud with their LLCs to get that money when they really had no employees at all. And there's federal charges pending against them. There are very bad LLCs out there that do these kinds of things, that do
Right.
real money laundering under that $5 million or less, or 20 or less employees. There are people out there that do that.
Right.
They're not like the salt of the earth, okay? The percentage of those people in that category are low when you really think about it. Really, if you were to really look at, and do the research and really look at it, the people where the real money laundering really happens is in the upper echelons of income, 5 million or more, billions of dollars, people
Right.
who have access to different systems that they can do that with.
And they're
Okay.
not under the scrutiny of this law.
Not today.
Okay.
Now, one of the things I do want to say, moving forward in this, I have a 220 plus page document from a CPA from up in Phoenix that was sent to me to review. And so let's talk about who are exempt from this. So I'll just name a few. There's about 20 exemptions. So currently, when this law was enacted in 2021, but now came into effect in 2024 in January to make everybody who has these entities compliant. Now we're at a situation where we have a new set of rules that are being enacted that are not written, that are, because like I said, this law is so vague, where in 2025, the businesses that have $5 million or more in income and more than 20 employees are going to be also hit with this because they're removing that exemption. It is in writing by FinCEN to the CPAs who also, those that are complying and actually doing the BOI report, the beneficial ownership information, those that are not in the know and don't even understand that they can be held culpable on their end in their business for doing that report for someone who have the LLC, LLPs, S Corps, and C Corps. So then what happens is that now that CPA firm, if they are successful at reporting to FinCEN this company based on the bank confiscating their assets, but they're also part of it. CPAs and the banks are now part of this. Then what happens is that the CPAs, if they have a successful um, uh,
Litigation.
litigation with FinCEN, which we don't know what that means because they really
It's
don't,
vague.
it's the law's so vague, but they confiscate the assets. The CPAs get 20% of the take and the banks get 30 to 40%, and then FinCEN gets the rest.
So these
Now,
entities with power are going to be financially incentivized to enforce the law, which
yeah.
really isn't even coming into play yet. It's
Mhm.
just, it opens up the door for all of these things to. Well, before we go forward, can you review what the actual law is and how the average person that's not in the know about this would be
Yes.
approached? Like next year, their CPA is going to say, "Oh, here's some new forms you have to fill out." How's
Yeah.
that going to work? Okay.
Yeah, okay, so let's talk about that. So let me give you some history here. Okay, so I've got some notes written down here. So
Thank
let's
you.
talk about, what it was is really is. So let's talk about what the Money Laundering Act is, because that's really important. So the Money Laundering Act was enacted in 1986. Okay. And it was part of the Anti-Drug Act
Hmm.
when it was abuse. In America, the Money Laundering Act it was made law to criminalize the mafia who was running drugs, cocaine and
Okay.
heroin, from Colombia back in the 80s.
Back in the
And
NAFTA days.
because they were making a lot of money and it was and they were trying to combat the drug laundering money. And then it was amended. And then what ended up happening was when 9/11 happened, the Money Laundering Act was instilled into the Patriot Act. Okay. And because of 9/11, the terrorist attacks. So the
Hmm.
Patriot Act came into effect on October, it was like towards the end of October, the 26th or the 27th of 2001. So then what ended up happening was when that Money Laundering Act got implemented into the Patriot Act during that period of time, then the act had sections where you could prosecute under money laundering measures. And it included, the Treasury Department, which is who is part of the FinCEN, the Treasury Department, authorized to designate, in financial institutions to start monitoring these types of events. Now, if there was money laundering back in those days that was happening, it wasn't as prominent as when they just instilled the law under FinCEN. But it gave under the Patriot Act, it opened up the doors for it even more because of the Terrorist Act. So when they implemented that, the Money Laundering Act, uh, the the BOI, the FinCEN law for the Social Security number under the Patriot Act, under the Money Laundering Act, what that did was it created this dynamic where you have your Social Security number attached to your LLC. So therefore, where they didn't have a system in place before to gather data about who you are and how you spend your money. Now they have a system within the federal government through the Treasury Department, through FinCEN, which is the Financial Crimes Enforcement Network. They have that now in place where now they have this database where everything about you, because your Social Security number is now attached to your business, of everything that you do, how you spend your money, what kind of real estate you own in your companies, everything they need to know is now in one database, where before it was in different databases, you see. And that was the whole purpose of this, was to create one database. And they used AI to do it. And the AI started in 2017. So now the financials, enforcement network, they have all these different kinds of regulations. And so then what ended up happening was, when they instilled this law with the beneficial ownership information, with the Financial Crimes Enforcement, that they enacted this law to happen on January 1st of 2024. They did it under the Anti-Money Laundering Act, and they did it under the auspices of the Patriot Act as counter-terrorist financing compliance. Okay, what does that mean? What the heck does that mean? Well, you want to know what it means? They're saying that all of us who are small business owners are terrorists. That's really what it is. Counter-terrorist financing, CTF. It's in the law. It's in this book. It's in this. It's in here. So and it was designed to help prevent criminals from using companies to launder money or finance terrorism. Now, I don't know about you, and I have to jump off on a tangent here, but I know a lot of small business owners. I'm sure you do too, and I'm sure every business owner that's watching this right now knows a lot of small business owners. Okay? Are they terrorists?
It depends on the lens people are looking through. So I guess the thing that, and this is where they use all of those terms, right? So you're just Joe Schmo and you're running your landscaping business, or you're me, and you're running your trauma healing business. And there's this entity over here that wants you to comply once a year and fill out your taxes. So I'm doing that, and I'm thinking, as I'm operating as an LLC, that I'm covered from liability. So I won't lose my
Yep,
home if something happens. I've got insurance that I carry in case something happens. I'm in compliance. I'm
yep,
doing business as an upstanding citizen of my community,
yes.
right? So now there's a new law that's going to be, and I know I've been watching some of the things that are out there in general, just CPAs talking about this or whatever. And they're just talking about it as if it's some other form that you have to fill out. It's not a big deal, but you do have to
Mm-hmm.
comply,
Mm-hmm.
right? But what you're telling us is everything that's going to go along with that. So let's
Mm-hmm.
say that in the scenario that you gave about you bought the hot dog and this whole avalanche of things go on, by the time anybody investigates it, for you to find out that it was just like a simple business expenditure that didn't line up with, you know, the widgets that you usually buy. Let's go back to our our junior high math book with the examples. So by the time you get any kind of recourse, which I want to go back to the lawyer thing too, because that's just mind blowing. But by the time you get any recourse, your entire life has been completely decimated because of an assumption. It's similar to like when people get
Yeah.
pulled over and the police just decides that there's something suspicious going on in the car and they can confiscate any
Yep.
money or weapons or anything you have in the car. And
Yep.
eventually you might be able to get that back,
Yep.
but you still have to go through all the channels.
Yep.
Um, So I'm on the right,
Oh,
I'm
you are
painting the
on, you
picture?
are spot
Okay,
on. Yeah, that
okay.
is the picture. And the underlying issue is that what people, the general population of everybody in business doesn't understand. And this is where it gets really scary. Honestly, every CPA in the country has been notified by FinCEN
Mhm.
to participate in being a spy for them. And I'm not going to mince words, to be a
Yeah,
spy for them. So if they see, and they're doing books for somebody, and they see a suspicious activity, that you turn these people in and there's a successful bust on these people for anti-terrorism and money laundering, you get 20% of their assets for turning them in. Good on you.
yeah, yeah.
What
I
people
mean,
don't get. And that's why these
yeah,
CPAs
wow.
out there saying, oh, there's nothing wrong with it. Well, whose side do you think they're on?
Yeah,
To the ones that do know.
yeah. We know what the financial incentives have been doing the last few years.
Yeah.
So
And
what
that's
can
the
somebody
scary
do?
part.
Yeah, what can somebody do to protect themselves against this? Like, what are the steps now that you have a general understanding? We can go into more detail too, and obviously we'll have a Q&A follow-up. But what do you do if you're an LLC or any of the other business entities that you listed, and you're facing this? Like you've got the countdown coming for the
Mhm.
next tax year.
Yeah. Uh-huh. Yeah.
What
Okay.
can you do to get things in order now? Or not open a new LLC or whatever it is, like what are your options to not only protect yourself from this, but also to find a way to protect yourself from overall liability that LLCs used to provide?
Yeah. You would like, what kind of a umbrella can you protect your family and your legacy with all the hard work that you've put into your company or your business or whatever? So the only example that I have is I can give to you what I had to do.
Okay.
Okay. And I can promise you that when I found out in September, I had a trust already, but it was not the same kind of trust that we're promoting to help people manage their assets now. And it's a
Mhm.
contract law trust. Okay. And there's lots of them out there. So I'll just give you a brief overview of what I had to do before the end of the year so that I could stay in business without having to comply with the Corporate Transparency Act. Because,
Okay.
like I told you in that earlier statement earlier,
Mhm.
I had already attached through my online banking my social
Right.
security number.
Right.
And when that became a reality to me that I had already complied, when they snuck it in on me that
Mhm.
quickly because I was ignorant to the idea of, oh, I figured they would just call me up and ask me for it. No, it's done by AI through the
Mhm.
online banking system. It's done through AI, through the monitoring, through the fraud prevention. It's all of that. That's been going on for a very long time. So that was my wake up call. So here's what I had to do. I had 6 LLCs. Okay.
Okay.
6. And of the 6 LLCs, I had 3 cash flow operating LLCs. And I had 2 nonprofits, of which I had one nonprofit that was functioning financially. The other one was on its way out the door. So technically, I had 3 LLCs of the 6, and I had one nonprofit that was cash flowing. Okay. Now, what does that mean? Well, when I found out what I had to do and where everything was going, I had to get some financial advice through the people that I'm involved with now, and with Wealth Legacy Partners, because I already had a trust and I realized that the trust I had was not copacetic to what I needed to do for my own personal gain down the road to ensure that my businesses would stay in compliance with ethics and integrity, and not because I was forced into something that would freeze the money that I'm working for. Because
Right.
in all honesty, just like everybody else since 2020, I was just getting back on my feet financially during this time as well. So now I'm financially getting myself back on track, and I'm realizing, oh my God. So what I had to do before the end of the year was I had to go to the state and close down all of my LLCs
Mhm.
immediately, every one of them. I couldn't even have, I couldn't even have them available to, use as member managed LLCs I couldn't even have those that I had been using. I couldn't have those or use those as well. And I had one in Wyoming also. So I had to close down everything. I had to go start there, and then I had to close down my bank accounts. And in the meantime, I got a beneficial trust for my personal assets, anything that I'm doing. And then I got a business trust for myself so that I could function with my companies, because I had active income, passive income is with beneficial trust. And I had a nonprofit that was making money and doing real estate investments in the local community, helping people out, which ended up being going into a charitable trust. So I have 3 trusts that I do trust to trust business. In the meantime, I had to close all my LLCs down. And by the way, nonprofits are allegedly supposed to be exempt. They're not. I can promise
Okay.
you with everything I am, they're not. And so with that being said, that's what I had to do. And I had to get this done in less than 3 months. On the 29th of December, I was successful, so that when January 1st rolled around, okay, even though knowing full well I was not going to comply, everything was shut down at that moment. But it took me 3 months I was a complete basket case, honestly, because I had to go back through everything and just undo what I had done over the last 25 years of my life in business to work, because I'm an LLC girl. I formed a lot of LLCs for companies
Hmm.
over the course of my lifetime. I love working with women-owned businesses. I was able to do some of that work. It was wonderful. And now all of that, everything I had worked for my whole entire life, over the last 25 years in an LLC fashion, was gone.
Hmm.
And I didn't know, and still am learning this new way of doing business to navigate. But what I do know is that the irrevocable, complex, discretionary spendthrift trusts are exempt, and they're not gauged in the banking system because of the contract law feasibility. That's how I had to save myself. And I'm just
Okay.
speaking about my companies. So if anybody even resonates with even a little bit of what I'm saying, of what I had to go through to stay in business, I hope that you can understand the detail that when one has to go through when you really fully grasp the idea of the dangers of
Right.
this law. And if you really want to stay in business, you're going to have to do something, because if you don't comply or fill out the BOI by the end of the year, and by the way, you got to fill it out every 90 days. And if one thing changes, guess what? And you forgot to, from your first report, you forgot to put that change in there, you're not in compliance, and they can fine you up to $500 a day from the day that you actually filled out the form. Every day, a $500 per day fine. And they can also fine you $10,000, and they can confiscate your assets, and they can also put you in a FEMA camp. Now, if you don't know what that's about, just all of you Google FEMA camps and maps. And when you do that, you're going to see FEMA camps all around the entire country. These have been in the process of being made since 2021, when they knew that they don't have enough jails to put people in for money laundering. So they built these FEMA camps. People say, "Oh, those are for the immigrants that are coming across the country." No, they're not. They're actually giving out loans to immigrants to buy houses. They're not putting them in FEMA camps. They're putting the average Joe who has a business, who is wanting to do the right thing as a money launderer, because they don't have anywhere to put them and their family. And it's not just the person that owns the business, it's the wife, it's the kids, it's everybody that has anything to do, that puts their name on this beneficial ownership information form that FinCEN is actually asking to have done for every LLC, LLP, S Corp, and C Corp in the nation and even overseas that have those types of businesses here. Nobody is. And then in 2025, when they abolished the exemption for the $5 million mark, can you imagine the number of people? They're attacking it layer by layer by layer and
Right.
confiscating the assets, you see. And there's stories we get
Incredible.
every week. Dawn and I get phone calls every single week from people who have had $1 million confiscated, $400,000 recently. We had a call where $400,000 was confiscated. One of my clients had $4,500 confiscated, and she still has no access. And that's all the money she had in her LLC. But something, she must have done something. You see how that thought process. What did she do to make them take her minimal $4,500 seriously? They're grabbing at anything. If they see that one transaction does not comply and appears to look like money laundering under the Patriot Act, it's all over. There is nothing. Even this woman that was a day trader, and I work with her. She was a day trader, and she got really good at it. She was just a housewife, and she learned how to day trade. She had 2 years ago, before the law was back in 2021 when this all started, she had nearly 2 years ago $1 million in a day trade account frozen. It is still frozen to this day. She can see it in her bank account, and she has no access to it. And their family lost everything because they were reliant upon that income. It happens, and it's getting worse. And by the end of this year, as a matter of fact, you can Google this yourself and do your own research. But how many suspicious activity reports were filed in 2021? Just Google it. How many suspicious activity reports were reported by the bank in 2021, 2022, 2023? The numbers are hundreds of thousands of SAR reports were filed by the banks over the last 3 years, and people weren't notified, you see,
Right.
and every one of those people have had their accounts frozen, and it's just going to get worse. And what's that going to do to the average person? You can be complacent about it all day long. It's okay. I mean, honestly, if that's what you want to do. But if you want to stay in business, you're going to have to find a way to stay in business, and you need to do it legally, you
Yeah.
see. And that's what these trusts do. It helps you stay in business legally. And
Okay.
also, if you have passive income, if you're an Etsy person, okay, if you're just one of those people, whatever, a beneficial trust is more than plenty, yourself included. We've talked about this.
Tell me what a beneficial trust is or the different types of trust, just so people understand them in general, and then
Okay.
what the process would be to move from being an LLC or even just a regular sole proprietor
Hmm.
into having your assets in a trust, your
Hmm.
income run through a trust. How does all that work?
So first of all, I want to say I'm not a lawyer and I'm not a CPA. I
Hmm.
am a retired paralegal that does contract law. Okay, that's what I do. So with that being said, I'm going to answer your question to the best of my ability on that level. So first of all, if you're a sole proprietor, and you had an LLC and you closed it down,
Hmm.
that is right now, without getting it into a trust, is the safest way to get passive income. Now, especially if you don't have any like insurance. I mean, if you have like public services or anything like that, you may lose some of that because now you're having to move, put your money all in your personal bank account. If you can't afford or do a trust, being a sole proprietor is going to be your best option
Okay.
outside of a trust. Okay. I'm not going to mince words about that. If you have assets, I would say then at that point, one of the services that you would want to consider is getting a will done, like a pour over will that protects your assets. Do you need a trust? It depends on what the dollar amount of your assets are and what the cap is within the state. And that
Hmm.
can be an appointment that you can set up with me. Now let's take it to the second level. There's different kinds of trusts. And you heard me mention a charitable trust is a really super great way if you have a nonprofit business and you have to file a 501(c)(3) with the feds. Charitable trust, you can actually close down your nonprofit and do everything with a charitable trust. And from that point forward, you never have to do anything to do fundraising, because a charitable trust takes the place of the 501(c)(3), and it's not government regulated. You can do 100% charitable, donations to and receive as well with the charitable trust. That's some of the things that like Bill Gates Foundation does. They have a charitable trust. They don't have to have a 501(c)(3) to, receive and give money.
Mhm.
And I'm saying Bill Gates Foundation. It's the Bill and Melinda
Yeah.
Gates Foundation. So a lot of the, billionaires that already understand how these trusts work do it that way. So then the next, there's oil and gas trusts, there's business trust, and there's beneficial trust. A beneficial trust is an overall trust that protects and allows someone who has assets in excess of, like, let's say $250,000, that want to put their assets into a trust to keep it from going to probate. And then you have a pour over will that wraps around that trust, that will help you, if you have a legacy that you want to have keep going, or you've owned some cryptocurrency, or you're dabbling in the stock market, a beneficial trust would be very good for you. You can put all of your assets, sell all of your assets to your beneficial trust. And keep in mind, these are irrevocable, non-grantor, complex discretionary spendthrift trusts. So these are contract law trusts that protect you and your assets from having, because estate tax could get as high as 68%. you know
So what
depends
about
on,
something like a life insurance policy or a retirement? Any of those kind of things? Can you put that in your trust too?
you cannot put IRAs in, you can't put 401(k)s in, but what you can do is you can make your trust the beneficiary to that.
Okay.
So once your trust is set up and you've got that money coming in, you can make your trust the beneficiary of the asset of the 401(k) or the IRA, so that should something happen to you, your trust and the co-trustee, because you'll be the trustee, the co-trustee, should something happen to you, should you die, transition, then your co-trustee would still be able to manage everything, because all of the banking letters and everything would already be part of the trust. And
Mhm.
also with the pour over will would designate how that whole operation happens, so that you don't have to go to probate. So you file that paperwork while you're alive, so that your trust can be, become the beneficiary. That's with life insurance policies, or any even automobile insurance policies. You just make, the trust the beneficiary.
Okay.
Yeah. And so it'll say you have a business, and you have a business asset, and you want to get rid of the LLCs, then you sell all of the assets to your beneficial trust, and then you have a business trust where you have active income from that LLC, whether it's a trucking industry, or it is, oh my goodness, I'm trying to think, a trucking industry, anything where you have active income in
Mhm.
coming in. So you create the business trust, and then you can have a lease agreement from your a beneficial trust to your business trust, and your beneficial trust becomes the beneficiary of your business trust. You don't want to have family, because it's kind of like a pass through, like what an LLC would be. But the beautiful thing is that, one of the best things about these trusts is that, if once you get everything into your trust and you sell your assets for what the value was when you bought them, if you get ready to sell them, you don't create taxable events. And
Mm.
that's the one of the hugest tax benefits, is that when you have these trusts, you can do business trust to trust to trust, and move the money within the trust. If you need to donate money to the charitable trust, that becomes, part of that whole spectrum of tax deductions that you can do in your beneficial trust when you need to file your taxes, where things end up zeroing out to the degree that they need to, or even minimal taxes that be paid, because you have all this paper trail, that you have to do. It's no different than when you have a business, and some people are really good at paper. I am really good at paper trail. You have a paper trail, and you utilize that paper trail for the best optimal tax benefits that you can get. And it's all done legally, because it's done from trust to trust to trust. So there's a beneficial trust that's personal assets, business for running companies where you have active income, and then you can move those funds to the beneficial trust for expenses, to pay your mortgage, to pay your real estate, to fix your house, to do all of that stuff. That's kind of how a business trust operates. Then you have your charitable trust. Then there are other trusts like real estate trusts, and then there's the syndicated real estate trusts. If you're an investor and you work with other friends and family and you buy apartment complexes and all of that, that can be all handled through a real estate trust. And it goes on and on. There's oil and
Okay.
gas trusts. It depends.
Right.
There's all kinds of trusts out there. But if you have cryptocurrency that you have in a ledger and you need to move that so that then you bought, like, let's say you were lucky enough to buy XRP at 27 cents a coin and it goes up to $5 and you want to take some money off of that, well, you sell it to your trust for the 27 cents. Okay.
Okay.
And then when you want to take it out, because your trust now owns that asset, you don't have to pay taxes on your profit because the money stays in the trust, you see. So you don't create a taxable event. That's just like a really small example of what you can do with a beneficial trust. And a
And
lot of
how,
people are invested into that kind of stuff.
yeah, yeah, good to know. How would this impact people? Most of us are getting to retirement age or already there. How would this impact any kind of Social Security income, disability income, food stamps, Section 8, any of those kind of things where
Oh, good
those of us in
question.
lower income realities?
Yeah. First of all, you never, if first of all, that's a good question, and that's a loaded question. So I'm going to try
Mm-hmm.
to. Let's say that you have an LLC, but your family, because of the low income that the money that you bring in from your LLC is in that area of where you're in the poverty
Mm-hmm.
and level.
Mm-hmm.
Okay. And you have your LLC, but you decide, you have your LLC. So now your social security number is attached to that LLC. So now the state is going to know whether you filed taxes, how much money you're making, and all of that income could actually um put a big red flag up for any social security benefits you have, because you're making extra money than what you're saying that that you're making, because now your social security number is attached. And if you're receiving food stamps or some kind of food, benefit
Mm-hmm.
that is requiring you to report to the state, then now your social security number is attached to your LLC. So you could lose your food stamp benefit. Okay. And also too, you may be forced to pay back some money to Social Security Administration
Mm-hmm.
too.
Mm-hmm.
We don't know, but that's what can happen. Okay. Because if you are receiving these benefits, but there's also another part to this, is that you don't want to do any kind of this is not about doing any kind of
Oh,
illegal
absolutely.
transfer.
Mm-hmm.
Don't do that.
Right. Right.
Okay, and if you came to me and you told me what you were planning, I would probably not do business with you, because I don't roll that way. I
Mm-hmm.
want to help people. I don't want to be part of, or even, think about that. And we have people like that do that, believe it or not. They do. It
Yeah.
does happen. So with that being said, there's also a thing like, let's say you're in your 70s and your 80s or somewhere in that area, you've got some assets, but you're also on Medicare and Medicaid. Well, there's a law called the clawback law. It's a clause. It's a clawback clause. And if you move your assets, like within there's a 5-year, gap there. There's a 5-year time frame on the clawback, that the state can still take your house if you have to go into assisted living. So,
Okay.
transferring that asset may not be in the highest and best good of that client, because that would be an illegal transfer to try to protect the asset, when there's a law that is deliberately made for the states, to if you don't have the money to pay for through your insurance or Medicaid or Medicare, whatever, Veterans Administration, they can actually seize your assets. So you want to,
Okay.
if you don't know what that's about and you need a second set of eyes on a situation where you may want to have a trust and a wraparound will around that trust, set up an appointment with me. I can go through that with you, and help you get a grasp on whether or not you fall into that category where it's a legal transfer, or it's an illegal transfer, if you're even contemplating that.
Mm-hmm.
It's because you don't want to lose your house, or you've got family living there and you want to, leave it, or
Right.
whatever you want to
Right.
do.
Yeah.
So yeah, there is definitely with this new law with attaching your social security number to your LLCs, it can really have an impact on you.
It's like a
Very
domino effect.
quickly. It is.
And it's
It,
all unforeseen too. It's like, I mean,
mhm,
bringing that up, obviously I'm not saying it to commit any kind of crimes, but
mhm.
people in those realities understand the, like somebody in your family dies, you're allowed to get a little bit of an inheritance, but then that means that you completely lose all of your benefits. So
Mhm.
it would like help you maybe get out of a bad neighborhood, but
Yeah,
then you don't have the ability to pay your rent anymore because this, $4,000 or whatever
yeah,
is enough to cut you off of something that
yep,
are legitimately entitled to because of
yes,
disability or age or, that sort of thing. So,
yes. Very
um,
good point.
exactly. So
That's
we're coming.
absolutely true, and that's scary. I
Yeah.
mean, the
Yeah.
older that you get and the less
Mm-hmm.
income that you're making, or the more government dependent that you become on the social services,
Mm-hmm.
it's a if then that if then what?
Right.
What if this happens, then what am I going to do?
Exactly.
And
Especially
if
with
you don't
things that
understand
you
that.
paid into your entire life and you were
Yeah,
told was going to be for that. It was your retirement income. And now they're
yep.
trying to treat it like it's some kind of special a welfare thing that
Mhm.
you are trying to take advantage of
Yeah,
the sweat of the younger generations or whatever. So
yeah.
um
That's a
anyway,
true statement.
exactly. We're coming up on about an hour. So I was wondering if you could give us a recap and then provide people with the information about how to contact you, the consults that you offer, and
Okay.
then I want people to. I know it was a lot to take in, a lot of
Yeah,
terminology, all of that. So if you want to do investigations on your own, and we'll have some information attached to where we publish this, so you can review the law, you can review
yeah.
some of the things that I think you said your business partner has a YouTube with
Yeah,
some, like,
Don
step-by-step.
Thornton, yes,
Okay.
he has he explains the Corporate Transparency Act. If you're, it's geared more towards businesses than it is
Mhm,
personally, but
mhm,
there's a lot of personal involved there, but it depends on where your head's at and how you want to approach it. There's just to educate yourself.
mhm,
He's out there, and because our goal, one of the reasons why I resonate so much with Dawn is because our goal is to help keep businesses in business. That's
right,
all we care about, and all we're doing is doing everything we can to educate every small business owner that we can come in touch with, to help them understand what the Corporate Transparency Act really means for them. And this is not something that needs to be swept under the rug and, oh, I'm going to
right,
comply, because it doesn't work that way. That's not how this law was geared. And if you haven't read this, and if I believe that you did put a
yeah,
link for this to,
mhm,
so if you haven't printed this out, it's like 56 pages. I've got mine in a plastic, because I refer to it all the time. If you haven't read it, take the time to print that out and read it, because if you're a small business owner, this is something that is going to be required of you by the end of this year. And if you don't comply, it's going to be automatic that everything that you have in the bank, if you don't put your social security number on your bank accounts, they're going to freeze your accounts. It's in here. It's
mhm,
right in here. It
mhm,
says that's what they're going to do. Okay. So that's the first thing. And then the second thing is that if you don't want to comply, and you're a rebel like I am, but I'm a rebel with
mm,
a cause, because this is just wrong on every
right,
single level. I'm not going to comply with anything that I've worked my hind end off for, that I'm not giving it
exactly,
away.
right,
I'm not going to allow you to freeze it when I'm not doing anything wrong.
absolutely.
Sorry, but that's just kind of how I roll.
Well, yeah, you're in good company. So yeah, I want people to, we'll put this out. People have access to it. They can, it's a lot to dig into, formulate some questions, and then we can have you back in the next couple of months with some Q&A.
That
And
sounds
in the
good. Whatever works. Yes.
wonderful. And then in the
Yeah.
meantime, people can get in touch with you if they want to do consults that are, more private, or they have something pressing that you're like, oh wow, I didn't realize this was a reality, and I'm going to give Janine a call and find
Yeah,
out.
I do a lot of consulting on lots of different levels,
Hmm.
okay? I consult with people on a lot of business, a lot of wills and probate. If you need to talk about, like, if let's say you have a will, and you need to ask some questions about how, should you get a new one? What do you need to do? Things have changed. My rule of thumb, if you fall into this category, if you haven't had a will revision in 2 years or longer, it's time to do one.
Okay.
You want to really kind of keep up to date with those about every 2 years, because our lives, especially right now with things are moving so quickly, we want to keep our wills up to date. If that's all you have and you're a sole proprietor and you're doing Etsy, or you're doing some kind of, passive income just to keep,
Hmm.
to make ends meet, then you would want to do something similar, have a will at least. But as far as if you're in business, I can consult you on that, but I can consult on lots of other things too. I'm working with a lady regarding a book situation
Okay.
that, that she needs some help on. So, I'm not opposed. If I can't do it, I'll tell you. And I'll
Great.
send you to somebody who can, if it's not something that I understand or know anything about. And I do not know a lot.
But you know people that know.
Yeah, I
Yeah,
can
and
be
that's
that person.
important. I mean, it's
Yeah.
easier to trust somebody that can tell you what their limitations are.
Yeah.
Appreciate
There's
that.
a lot I don't know, believe me,
Yeah, but there's a
especially
lot you do, and I really appreciate you sharing that with us today.
and real estate too. If you guys own
Okay.
real estate, or you're looking at buying and selling, or you want to understand, a transaction, or what proper things are, and I've been in real estate 40 years of my life, literally. So I can help you with that. That's easy.
Wonderful.
Real estate probate. That's where my genres are: trusts, wills, and all that stuff.
Great. Thank you so much for your time and expertise.
You're welcome.
We'll
It
be in
was wonderful
touch.
catching up with you.
Thanks,
Yes,
Janine.
you bet. Peace out. See ya.